In Hong Kong, despite the ongoing political unrest in the territory, investment flows into Hong Kong haven't been affected. And that's according to the Tricor Group, a top corporate services and business solutions provider.
Roland Lim caught up with its group CEO, Lennard Yong, and found out that investors are willing to stomach the political risk because the growth in Asia can't be ignored, and Hong Kong is well placed to benefit.
And we see fundamentally very strong inflows of trade, foreign direct investments into the Asia-Pacific region. And trade is always relative. So while the global trade foreign direct investment flows have contracted slightly, the net share to Asia is up. And that is good news for all of us in Asia, including here in Hong Kong. So as we zoom in on Hong Kong, mainland China, Hong Kong SAR and Singapore actually receive almost 2/3, 65% of all the foreign direct investments. Hong Kong remains an important player.
Hong Kong is in uncharted territories with the social political unrest, but do you see trade and investment flows more affected by the US-Sino trade tensions?
When we look at Hong Kong, fundamentally I think Hong Kong still has a lot of elements that make it very conducive for trade and investments, despite some of the issues that we currently face. So for example, if you look at its ability to set its own monetary policy, I'm also encouraged to see that the government put in place some stimulus as well to encourage more trade and investments into Hong Kong.
Since the global financial crisis, Hong Kong has seen unprecedented inflows, up to $130 billion, says the Hong Kong Monetary Authority. Since the political crisis in June, analysts estimate maybe some $3 billion has left the city. So that's still quite insignificant. But do you see in the longer run, if the turmoil persists, whether more investments will actually take their money out of Hong Kong?
We see a lot of the investment appetite coming from China into Hong Kong, which has been, I would say, one of the biggest drivers of the Hong Kong economy that remains still very strong. A lot of our clients are still choosing Hong Kong as a jurisdiction to start their business for the greater Asia region. So I think we're encouraged that Hong Kong has a lot of resilience.
So no evidence of regional headquartered companies, multinationals who have regional headquarters here, thinking or planning to divest some of the operations into the neighboring regions?
We haven't seen a lot of clients specifically consider in terms of making those changes. What we see is basically that there's always market entry, and those are precipitated by a lot of decisions that they made for trade and investment. So we still see a fair share coming into Hong Kong and also across the Asia region, but most of this were in essence following the consumers, following the markets or the products that they are driving.